Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes, or maybe a little bit longer in this case, we're going to be looking at Bitcoin and try and bring everybody up to speed on what I'm thinking. Now, before we start our Elliott wave analysis and our basic technical analysis, I just want to start with a couple of caveats. Number one, I don't have a crystal ball. And I'm not Neo. I don't see the matrix in ones and zeros and know exactly what's going to happen next. And anybody who proposes that they do is talking shit. Okay, what I do have is ideas, technical data, and targets and interpretations to share to bring you up to speed on what I'm thinking, and that's the best I can do. Okay, I appreciate after the recent meltdown in price, a lot of people are freaking out. I don't blame you. I've been there before. I was there in 2017. I had the fortune of getting in on the bear market loads of 2015 and working my way up to that lovely high at 20 grand and making a lot of money along the way. I've made a lot of money along the way this time as well. And the crypto veterans have had it easy, I guess, because once you've gone through that trauma once, it doesn't shake you anymore. You're like Mr. Bean on the roller coaster. That meme, everyone's screaming and you don't give a shit, and that's basically how I feel about this. So if you are freaking out and you brought the high, I can try and reassure you that I don't think that was the high. That's all I can say. So we're going to look at that and try and wrap our heads around it. Okay, so here's our chart. We're going to come back and look at this in more detail later. First thing I want you to look at is the pitchfork. I'm using this to frame the geometry of the market in log scale on the daily time frame. 1, 2, long-winded three-way regular flat. 3, 4, short and violent zigzag to a major target. Alright, we'll come in and look at these because I still have lower targets to believe it or not, but it could fall lower too. I've removed the higher targets since they've been invalidated. We'll come and look at that in detail, but before we do, we're going to come over and we're going to have a look at this chart. Nice and simple. Okay, so I'm just going to get rid of this count for a moment. There's multiple things I want to talk about here. Let's first put up my pitchfork we just saw there. So for me, this top here in 2013 and subsequent bear market to this low where we tagged the channel, to this high and to this low here, these were the bull market moves and the bear market moves, cycle wave degree. Now you could argue primary into cycle, that's actually my preferred interpretation, but you could argue cycle wave 1, cycle wave 2, cycle wave 3, cycle wave 4. Now let's just assume for a moment that's the case and we're using 1 to find 3 to find 5. Well, this is way higher where we'd expect to see 5 complete. And we have 1, 2, 3, 4 waves so far inside of our pitchfork, okay, heading higher in a 5th, which I don't believe has completed yet. Now the 4 has come back to the median line. Now you can obsess over wicks and how far things wick through things, but if you appreciate the volatility of this market, you appreciate volatility spikes, and a wick through something isn't necessarily invalidating the support there or the resistance there. What matters is where we finish after doing it. Now, if we're counting, we have to respect wicks, okay, in terms of invalidation. But when we're talking support, resistance, we have to be a little bit more flexible. So a move down to the median line, coinciding with a couple of fib levels we'll look at later. Okay, so what I'm trying to say is the current trend and the current geometry of this trend is still well intact. Well intact. Here's the invalidation point here at 14 grand. Okay, we can still have a wave 4 down to the edge of the pitchfork we've used to frame the market, not get anywhere near invalidating and still come up. Okay, that's a possibility. So no reason to think the bull market is dead. No technical reason as of yet which has invalidated it. Now that doesn't mean it's not. And I'm completely wrong, but for the moment I see no reason to think that the geometry we're using here to frame the market has failed. It still looks perfectly intact to me. Alright, so in that sense I think we're moving higher. Now how long we take to correct this wave 4, it could be over. Right, the bottom could be in and it could be over and we could be on our way up in the next few weeks, or it could take months. Wave 4s can divide as a zigzag As a flat, we wouldn't expect the flat, as we've already had one in the 2, so we'd expect to see a zigzag, or the alternate would be a double combination, triple combination, or a triangle. Now, if it was a triangle, just theorising for a moment, let's say we go 3 ways to here, 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 and we get ourselves a triangle built. This could drag us out well into to the end of the year. You know, it could. It could drag us out into the late summer. It could drag us out to the end of the year, and then you could get that final move up into a 5. Right, now that's not how I'm interpreting it currently. I'm simply talking about options. The reason I'm discussing those as options is because the attitude after a sudden fall or collapse like this in the market, and especially amongst market participants who are newer to the market, is oh my god, when's it going to be over? When moon again? When green again? Is it over yet? Please, is it over yet? It's like, guys, it's been a week. Get a fucking grip. It's been a week. You know, it ain't over. Or it is over, but for God's sake, why are we in a hurry? You know, you need to just put your emotions to one side for a minute and stop freaking out. Now, I'm not lecturing, and I'm not being facetious. Just the voice of experience talking here. You're not going to do yourself any favours thinking like that. Right, so, that's that done. Trend is intact. I think we're going higher. Can't tell you how long the wave forward is going to be done. Can't tell you if it's complete. We're going to look in detail into our other chart later. But I think the trend is intact. The bull market's alive, and we're still going higher. I'm going to lean bullishly, and I'm going to hang my head up, stick my head up above the parapet, and say that's all I think. So that's number 1. If you tuned in to find out whether Tom's still bullish or bearish, that's number 1. Done. You can leave now if you want. Now let's look at some other ideas. We're going to just get rid of this count for a minute, and we're going to consider another alternative. Now, there's a lot of discussion going on with my patrons at the moment, and with our Patreon members at the moment on the Discord. It's bloody brilliant. It's great to see so many people sharing ideas, alternatives, different counts, different interpretations, different forms of technical analysis. It's all brilliant. It's great to see people communicating that, and I've had some lively discussions with people as well, which I always embrace. I love a good argument or a good debate. Now, the point I'm making is one of the interpretations, and I've even fit a fib channel around it for people to appreciate it, is this idea that we've gone 1, this was the first cycle wave, 2, 3, but instead of this here where I've got it, this here into a 4, and then a 5. Now even if you were of this interpretation, I suppose you could put the 5 here at 60 odd thousand, even though the top of the trend channel goes to 2.5 or 250 odd thousand. You could argue for an early completion. Okay, so yes, maybe it's the end, and it's the end of the end, and it's a 1 up here, and we're going to correct all of this data. I don't think that. I think even if you've got this interpretation, you still have to put the 5 here. You've got to go 1 to find the 3 to find the 5. That would be my interpretation if I wanted this count. The issue is, if I was going to adopt this, I'd have to move the 4 to here, because I can't live with this as a 3-wave correction. Okay, I see here a wave 1, as I said with my pitchfork, wave 2, wave 3, wave 4, and a wave 5. That's how I'm seeing this. Now the reason I can't accept this, I'm not saying you can't. There are people out there are Puritans, and there are interpretives or flexible Elliott wave practitioner out there. I happen to be a Puritan Elliott wave practitioner. It's just my own personal opinion that rules are there to be followed, and if you're not going to follow all the rules, you might as well follow none of them. That's just my opinion. Yeah, and anyone who disagrees, that's absolutely fine. We are all different. I see a 3-wave move to here for our wave 4. Okay, then I see a 1 and a 2. And a 3 and a 4. So let me just come in and explain why I don't like this as a 3-wave move. It's because it doesn't identify as any variant of a flat pattern. That's all it is. You know, if it was an expanding flat, it would come down, then it would go up before where it began, and it would come down beyond where the A completed. It would look like that. Okay. If it was a regular flat, it would come down, up, not beyond where it started, and then down further from where this first wave completed, and it would look like that. Okay, that's probably more of a zigzag, but you get my meaning. And if it was a running flat, it would come down, then up, then down and finish before the initial wave completed. And there are three variants of flat pattern: expanding, regular, and running. And this doesn't fit any of them. We come down in an initial wave, we come back up, and then we complete before that initial wave finished. Well, that doesn't look like a flat pattern to me. If it isn't a flat pattern by Puritan beliefs, so I'm not going to accept that because it isn't a flat pattern. Now you could argue maybe underlying all of this was a triangle, possibly, and then a breakdown. I could just get my lines here for a minute. So maybe you could argue that you could say, well, maybe you could say that this was a triangle, and we went A, B, C, and then a very quick D, E, and off we go into a 1, 2, 3, 4. That's something that I've previously dismissed, and I still don't like it, and I've still dismissed it because it doesn't have the right look to me. So for me, this is a 3-wave move down, and then this is a 1 and a 2. And I think this divides neatly if we come in and have a quick look. I think this divides nicely as a 5-wave structure with a subdivision in the 3 that you can see as well. Now that we tackled that, let's tackle the actual correction. Okay, so what I see here, we'll tell you what we're going to do. We're going to come over to our main chart now, and we're going to just clear this pitchfork out of the way, because I think I've said enough on that other chart now. I've established the greater trend. But one other thing I will point out, and once again, like I said, I'm not being a facetious bugger or anything, or trying to offend or upset anyone, and even if I did, I don't care, but I swear to God, I'm not trying to. When you're looking at the entire history of Bitcoin on the log scale, and you're trying to assess the scale of a move, it has to be done relative to the prior moves. Okay, the size of these swings. Okay, all the way back when we were talking about Bitcoin being below below $3, all the way to 60 odd thousand. The relative moves, and what we're all freaking out about is that, it's like, get a grip. It's not a big deal, is it? Okay, that's all we're freaking out about. So let's come over to the count now, and let's dig back a little while into my primary wave count 1 into 2. Now what I see here, we get an A, B, C move down into an A, and then after that we've got to get down into this March low, into the coronavirus low. I see an expanding flat here. Okay, B, C, A comes up, B goes beyond where the A started, C completes beyond where the A finished, and then I get a 5-wave impulse in a hurry, admittedly, a hell of a rush because of this meltdown in the coronavirus panic, but I get a completed C. So I get an overall A, B, C, like that. Now, I can't find a 3-wave structure in here to justify counting this as a double combo. I see this as an impulse and then a violent acceleration, and completion is 5 waves for an ABC, completing a 2. Right, and then from there we start our move up, and we've covered all of this in previous videos. I'm not going to waste time. Let's come back into our top. This is the bit that we're interested in at the moment. So this is the count I've had up for a long time, which I initially put as the alternate and favoured an expanding flat pattern. The expanding flat is still technically possible. It just doesn't look like an expanding flat anymore because we've come down so far. This, however, does still fit a zigzag, right? Down here like this. It is deep, I'll give you that. Okay, but the C is still within the bounds of acceptable margin for where we'd expect to see it. We come down to the 161.8% of C equals A. We came down to, this was one of the targets we discussed in previous videos. We came down to it, which is around 30,300. I think we basically went a little bit below it. We went to 30,094, whipped through it slightly, but I would say this was probably the main feature down here that gave us support. Okay, there's also structural support here. What do I mean by structural support? Let's just get a trend line. Click on the bottom of the low here. We're going to drag the low across a point of contact here. Okay, and we're going to set our trend line there. Now this might be, within a tick or two. Let's just get this down to here. Exactly on the bottom of that wick. We need to move up a little bit to take in those wicks. Okay, so there we go, we're touching. Now as you can see, the move down coincides with a return to trend. Once again, yes, we've whipped through it, but we're not going to freak out about that. We're dealing with the most volatile asset known to the human species, so let's give ourselves a break. Alright, come down here and see what kind of slippage we're talking about. Like a 1.5% wick through the trend line, I make it. You could argue that you don't need to be as strict with the placement of the trend line, because let's say we're establishing a wave 4, correct? We're establishing a wave 4, so we could just go point to point. This is the bottom of our 2, and we just connect it to a 4 and assume that that's good enough. I don't think we should do that. We should look for something in between. We've got a touch here, and that's good enough. So yeah, you could be a little bit more liberal or a little bit more conservative with the placement of this trend line, but overall, given that we gave up half the value of the market and more, I'd say in such a violent move down to finish roughly within 1% or 2 of the trend, it's pretty solid. I'm going to call that a return to trend for the meantime. And we came down to the 1.618 extension. Now let's say we break trend. Okay, then we have to think about the invalidation of the count. That's our next priority, because people lose perspective. That's the only way I can put it, and I lose perspective sometimes too. But you have to remember that you've come a long, long way since the start of this wave 3. You've come up from below $4,000 to $64,000. All right. So when people go, this looks like a bit of a deep wave 4, yeah, it's because you started at $4,000, mate, and you finished at 64,000. Okay, so we can forgive a deep 4, I think. Once again, I'm not being a dick. I'm just saying, come on. Of course, we can have a deep 4. We could come to 22,000 to find the 38.2% retracement in log scale here at 22,000. This 1618, by the way, is a measurement in arithmetic scale. Okay, because as I've explained in previous videos, if I'm looking at a move from 4 to 64,000, I'm probably going to look at it in log. If I'm looking at a move from 64,000 to this swing low here at 40,000, to this swing high here at 61,000, to this swing here at 30,000, I'm going to look at it in arithmetic. It's a smaller movement overall. So, and then I'm still going to look at it in log and arithmetic overall as well to try and find as many clues as possible. So here's the next target, 38.2%, retracement of the wave 3, 22 grand. If we break trend again and come down to set another low, this would be my next target. But we don't invalidate the count until we get back to 13,880. Okay, we don't break the count until then. Prior cyclical moves in Bitcoin have retraced huge percentages of the price. Right, so for anyone saying, oh, that's too deep to be a 4, well, let's take the example of this, the 2017 being a cycle wave 3 high, yeah? Because that's what I've seen suggested. I'm not saying it's wrong, it could be right, but let's just remind ourselves that how deep a wave 4 can be. Okay, so 84% sell-off in price. Oh, that's a deep 4. Yeah, but you have to remember, you started your wave 2 at 154 bucks. So you're allowed a deep 4. We started this wave 2 at 4 grand. We went to 64, so you're allowed a deep 4. Okay, it's all relative, guys, to the previous movements. We've come a long way so damn fast that people just lose perspective on how far we've come. So before we freak out, let's remember that an 80%, 50%, 60%, 70%, 80% move down in price is normal. I'm going to say that again, just in case people think I've gone mad. I haven't gone mad. And 50, 60 to 70% or 80% move in crypto price is normal. What matters is whether or not we've invalidated the current trend and the current count. And I think we've got a long bloody way to go before we can say we've done that. Well, I don't think it, I know it. Well, I don't know it. I think according to my count, we could fall, look, what's that, 78, so 80% again. You've got to fall 80% from the highs before you invalidate this count. Okay? Don't think we will. Think we'll find support before then, and I think it will still be a way forward when it's done. And that's all I'm going to say on the matter now. I think I've seen other arguments, I'm open to them, but nothing else, to be absolutely honest, has convinced me otherwise at the moment. Nothing else. The only ideas that have really interested me is if I've got this initial move wrong, and I'm willing to accept that that could be right. If this is an ABC down, maybe it's just the ABC. This is a diagonal completion, but rather than getting a zigzag, what if, and this is an idea that does intrigue me, is it's just the beginning of a correction. We do not know. The only thing I can say is I haven't seen a motive wave off the low that has convinced me we're going straight back up. I don't believe that's the case. And if we're not going straight back up, we're probably going to buy time with time or with price. So we're either going to go 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, and we'll get that triangle. Okay, and we can develop a triangle like this. Oh, I've got the magnet still on, haven't I? And we'll put ourselves into some kind of triangle out into the summer, maybe out into the winter, maybe out to the end of the year. I don't know. It could go on for a bloody long time. A triangle can. You can get narrower and narrower and narrower. Then there's the alternative that this is a free wave move. And this, instead of being a zigzag, is simply a free wave move in a flat. And you could argue that you're going to come all the way back above the high, and then you're going to come down in 5 waves. Lower than there, I'd expect. Something like that for a 4. Okay, get an expanding flat. I don't like that idea because we had a flat pattern in the 2. We had a regular flat pattern in the 2, so I wouldn't expect that. That would be unusual. So a zigzag, but then you still got the option of 3 waves into a W, 3 waves into a Y. And you could have a WXY combination, and this could still waste a few months and still bring us lower. And then there's the final option of we will put in a motive wave. It is on such a larger wave degree that we can't see it yet, and we're just going to go boom, 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 and off we go to new highs. We're just not going to stop. And this is the Moon Boy dream that, you know, moon now, correction over now. I don't think it's going to work out that way. It'd be great if it did, since I got clobbered with buy orders on the way down here. I hadn't looked at my phone all day. Like I said, my little girl's been ill lately. She's doing fantastic now, so much better. But I haven't really been spending that much time looking at things, and my phone was going off. And by the time I got to my computer, I was like, "That's a lot of buy orders that have got to hit, and not just in Bitcoin, across the crypto space." So, if you want to take reassurance from that, feel free. I'm buying. And I'm still accumulating over the long term, and I saw a 50% sell-off across the crypto space as a pretty good opportunity to do it. Alright then guys, I am going to now wrap up with some basic technical analysis. I hope that helped illuminate you. I hope that's helped ground you if you are panicking or running around, and I hope it hasn't added to the confusion. I hope it's helped reduce some of the confusion. Alright, like I said, no crystal ball here, but I still see targets lower. I see the potential that we've bottomed. We're just going to have to be patient. Alright then guys, let's clear off the count. Let's bring up our exponential moving averages. 10 in yellow, 20 in blue, 60 in orange, 250 in green, and our RSI and MACD. And see what we can see starting on the weekly time frame. We are going to look at it in log, I think, because it just makes the chart much easier to digest. So let's come in from the low of 2018 and have a look at what we can see. So on basic technical analysis terms, we found the 60 exponential moving average to the tick. We've wicked ever so slightly through it, not a surprise. It's roughly the same we've wicked through the trend. It's roughly the same we've wicked through the 1618, but the 1.618 extension of the initial move down, the overall long-term trend line, and the 60 exponential moving average are all at the same place. Okay, so this is how we found support, guys. It's a combination of elements, but this is our support here at the 60 exponential moving average on the weekly. We wicked through it, but we found it. Right, below the 10, below the 20. No crossover of the no crossing over of the exponential moving averages yet, but we may well expect to see it if we don't get back above them soon. This would point towards a longer term consolidation. Alright, still well off for 250. Haven't tested that on the weekly time frame since the coronavirus low and the 2018 bear market low. If we came down to there, we would, at the moment, if we got down there in a hurry, that would invalidate the count, but I don't see that happening in that time frame. That would have to be down here within 2 weeks, and I don't see that happening. Could be wrong, but it would move up just enough to keep us safe from invalidation if it were to operate as support. A long way away from our point of control. Not surprising, we've gone from 4 to £64,000. Remember, we've mentioned that. RSI, we came to very high levels in the RSI on the weekly time frame. Now, I like this from my count as a wave 3. From extremely oversold, end of the bear market at the 250 exponential moving average, we move up into overbought. We move down back to oversold to complete our wave 1, 2, RSI here, 1, 2, price. We then reach a peak of momentum, the highest we've seen so far in this market, in the pitchfork, in our primary count, wave 3 into wave 4, we reach the peak of our RSI. It's where I'd expect to see it, in the 3. Okay, now the MACD, same story, except just more extreme. The small move we see here in the 1-2 and the huge move we see here in momentum in the 3. So I still feel that the increase to higher levels in RSI, the huge swing in the MACD support the idea that we've gone 1, 2, 3. 1, 2, 3, not 5 the top. That's what I'm leaning into. So that's the weekly time frame. Back into neutral territory on the RSI. Being as it's a primary wave degree, this makes me feel like we should come to oversold. So maybe a lower target is still possible. That 22 grand target maybe to find the 4. We don't have to come to oversold. We did it in the wave 2. Wave 2s are traditionally quite deep. Wave 4 doesn't have to do it, but normally in large wave moves you tend to go oversold, overbought, oversold, overbought, oversold, overbought. But we'll see. We're in neutral territory at the moment. MACD looking very, very, very bearish. There's just no denying that. There's no point looking at it any other way. Short-term moving average has crossed over the long-term moving average, and long-term moving average is now trending downwards with the short-term moving average, which is trending lower. Big red bars on the histogram. This looks scary as hell, and looks like a potential move down is not complete. But we all know that one smaller, lighter coloured red bar on the histogram next week would be all we need to start to see these moving averages turning up and potentially spend some time consolidating or even reverse. Right, so this is the whole point of me saying it's early days yet. Daytime frame. Right then, let's have a look. What coincides with us on the 60 exponential moving average down here, we don't have anything on the daytime frame to show us support from moving averages. We have, however, come up to the 250 exponential moving average, and we've put bars around it, above it and below it. So it's important at the moment that this is holding. We want to see a move above this if we're going to count this as the low. If this is a low, we want to get, even if we start consolidating sideways, a move back above the 250 would be positive. We have now got the 10, the 20 and the 60 all racing down to meters with the price below them. This is bearish, no doubt about it. Price is currently below them. If we pull the 60 through the 250 on the daily time frame with the price below it, that would be very bearish as well, and we could look at going lower. So once again, we're in that kind of no man's land. We've got our overall interpretation, and we've got our other analysis telling us that things are looking pretty grim. However, we have reached extremely oversold conditions on the RSI on the daily time frame down here at 17.48 I make it, or even 17 apparently, somewhere around 17 on the RSI. So a bounce from here is likely. Is it a bounce that's going to be enough to get us above these moving averages and consolidate for a while? or is it going to be a temporary flash in the pan before we break down lower? If we break down lower, we'll look for those other targets and we'll expect a longer term consolidation, I think. I'm already kind of leaning towards a longer term consolidation, multi-month correction, while we trade our way through this wave 4. On the MACD, we've got bearish momentum dying off, not bullish yet, but smaller bars on the histogram, shorter term moving average starting to flatten out, hopefully get a crossover within the next week or so, or over during next week or the week after, get ourselves moving above these moving averages, put in some kind of either three wave corrective structure. So once again, the idea that, excuse all the stuff coming back up, that we've gone 1, 2, 3, 1, 2, 3 back above all this noise, and then 1, 2, 3, 4, 5 or 3. No, it won't be 5, it'd be 3 for a WXY. I'm not unwilling to accept it as a flat, I'm just don't expect it to be. 3, and then 3 below them, and then 3 above them, and then 3 triangle might well work out, or a double combo. Okay, either way, up and down for a while would be my guess. If we go back above the all-time high next week, I will happily hold up my hands and say wrong. It was a 3-4, but it was over in a flash. So right with the count, wrong with the time frame. If it continues to move lower and test and look for lower targets or consolidate, then a longer term consolidation before moving high is what I'd expect to see. Alright guys, I'm going to leave it there. And if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you feel like it. And also, thank you once again to all my patrons. Your support is greatly appreciated. You've been a great help in helping me clarify my own thoughts with our discussions on the Discord, and I'm always interested in hearing what you've got to say. If you are interested in becoming a member, then there's a link to my Patreon in the description box below. Go over and have a read of the different tiers and see what's available, see if there's anything you like. I would say that if you are going to subscribe, we're getting towards the end of the month. It's always best to do it near the start of the month so you don't get charged in succession for the 2 months back to back, but it's totally up to you when you join if you want to. There's also a link to my Twitter feed in the description box below, excuse me. If you're not following me yet, please head over and do so. I always try to announce upcoming videos before I upload them. Alright guys, take care, all the best, I'll be back with you soon, bye bye.